Well, I appreciate everybody here. Thank you so much. I'm Don Mitchell. I'm an author, real estate investor, and a broker with Icon Properties. And I want to welcome you and thank you for joining us tonight, well, for tonight's webinar. But tonight, what we're going to talk about is unlocking the secrets to passive real estate investments. And so we appreciate your time. We're excited to share how real estate can be a powerful tool in building long-term wealth, passive income, without the grind of hands-on management. So before we get started, I'd like to introduce my business partner, Dev, who will provide you an overview of what you can expect from tonight's session. Hey, Dev.
Hey, Don. Thank you. Hi, everyone. I'm Dev Singh, real estate investor and agent with Icon Properties. Over the years, we've helped investors like you build profitable real estate portfolios that generate consistent passive income. Whether you're new to real estate or a seasoned investor, tonight's session is designed to equip you with the strategies you need to create wealth, cash flow, and financial freedom, all without the hassle of managing everything yourself.
And to your point, Dev, success doesn't have to come from endless grinding. There's actually a better way. And instead of chasing cheap deals in tough neighborhoods or trying to do it all on your own, real estate investing can work for you, not just because of your efforts. So tonight, we're going to show you how to shift your approach and unlock the true potential of strategic passive investing. So tonight, we have a special guest, Jim Shields. Hey, Dev, tell us more about Mr. Shields.
Absolutely, Don. So I'm excited to introduce Jim Sheils. He's a best-selling author, respected real estate expert, and a leader in the build-to-rent space. As a partner at Southern Impression Homes, Jim has played a key role in shaping the future of rental property investing, helping investors build successful portfolio in Florida's most profitable markets, along with several other states. Beyond real estate, Jim is the co-founder of 18 Summers, an acclaimed organization that empowers entrepreneurs and professionals to achieve business success while strengthening their personal family relationships. Jim's expertise and visionary approach have established him as a leader both in business and personal development. So let's give a welcome to Mr. Jim Shields.
All
All
right.
right. Dev, Don, thanks for having me tonight, guys. Thanks everyone for joining us. I know you're all just getting off work, probably just finishing dinner. We're just going to go through a little bit about what our new construction turnkey system does, a little bit about our history, some of our principles, and how, if we are a fit, we could possibly work together. I'm going to tell you the story during this thing of how Dev and Don and I were brought together, which really did signify why it makes a lot of sense for California investors, which I was in California for years, have come to Florida to kind of redistribute their wealth opportunities into the real estate here. So I'm a partner at Southern Impression Homes. We have a very simple business model. We only do new construction. We do not do fixer-uppers anymore. I did them for 15 years. The last 10 I've done new construction and stuck to only these three types of properties: single-family homes, duplexes, so 2 units, one under one roof, and then quads, fourplexes, some people call them. And this has been our main recipe for success for not only my wealth and my partner's wealth, but many of our clients' wealth. And we'll explain some of that tonight. We're very heavily invested in Florida. 12 different markets currently. You'll see that you're not going to see us in Orlando, you're not going to see us in Tampa, and you're not going to see us in Miami. And for a non-Floridian, which I was 20 years ago, I said, well, that's all there is, right? The answer is no. You are wanting to look for affordable markets that have key indicators for growth. And that's why we've loaded up on land and building in these areas and not the main three markets, because we find that over leveraged. All the markets we go into have these 5 factors. If we're going to build investment properties there for ourselves and our clients, we want to make sure there's economic growth there, population growth, affordability. This is a big one right now. I know you guys really feel the brunt of this in San Francisco. What's the affordability like for that area? That helps with cash flow, that helps with potential more value growth. So that's a key element for us. Also, desirability. Is there some draw to wanting to live in that area? Is it a desirable area to live? Is it safe? Are there good landlord laws if you're investing? And also healthy supply and demand. Obviously, as builders, we don't want to go in anywhere there's too many houses. We want to go where there's not enough. What we do, we work with wealthy and ultra wealthy people to build successful rental portfolios for long-term growth. That has been our mission for many of years, and we'll tell you some of the success stories that we've had in this. Affordable new construction in affordable high growth markets with low interest rate financing to help ensure cash flow. And you guys are probably saying, how do you have low interest mortgages today with interest rates high? Well, we're going to talk about our in-house financing that is actually locking our investors in at 3.75% tonight. And all this, for it to work, you have to have world-class property management in place. If you're going to be across the country, you need to have that. That's what we bring in as well. Now, we've grown a lot over the last 10 years. You can see our old office on the left to our new office on the right. And we've had a lot of strength come to our aid to really excel it to the next level. We had a large Japanese company buy into us about 2 years ago, which means we have zero bank debt, a very strong balance sheet, which gives safety, security, and better deals to our people. My wife and I also co-authored a best-selling USA Today book called The Passive Income Playbook. It's all about how do you leverage new construction rentals to buy back your time and be able to have that, what we call a legendary family life. And all for that means is we have time to spend with our 5 children and with causes that we care about. Everyone, by the way, Don and Dev, if they put in the chat box their name, we will make sure that they get a copy of the book free mailed to them. It's $22.95. You go to Barnes and Nobles, we'll give it to you for free tonight. So this is our system right here, guys. We build the property right for you, we finance it right for you, and we manage it right. And those are the 3 key elements you need, whether you're buying 1 house, 10 houses, 100 houses. And we bring in all those pieces because all these pieces can either make or break you. You get a property, you don't know how to develop it, you don't know how to build it right, you can't get the right bank to finance you at a low enough mortgage, and you don't have good management in place, you're in trouble. We bring in all these pieces so you don't have to think about it. Now, currently we have just under $1 billion under asset management. That produces about 56 million a year in annual recurring revenue for our investors. We've created over 200 million in equity for our investors just in the last few years. We currently have over 1,000 active investors, and that grows weekly. We've developed over 9,000 units. We house over 10,000 residents. We have over 120 people on our team, and again, that's growing on a weekly basis as well. And it is a minimum investment of $80,000 to get started with us. Again, we're not
Hey,
for everybody.
hey,
Yep,
Jim, I don't mean to cut your flow,
please
but we
do.
don't see your screen, or your screen is not being shared right now.
I think it's good on my end here.
Oh, oh, okay. My bad. It's not
Yeah, no,
showing up.
I mean, Don, sorry
Okay,
about
no
that.
problem. We're all good. I'll
So,
figure it out. Keep on going. I'm sorry.
okay, no problem, no problem. Okay, so 80,000 minimum investment to start building the portfolio. And we are very serious about Florida. We have over 5,000 lots here in Florida in those key markets I showed you on that one slide that we plan to build out with our recipe for success, not only for ourselves, but for our investor clients as well. There's 5 ways to make money in real estate. It's appreciation, leverage, debt paydown, tax benefits, and cash flow. I believe in all of these guys. But the first one is what's made me a multimillionaire. It's getting into properties with the right fundamentals and holding the property long term. Don was alluding to that in the beginning of our night tonight. And savvy investors use proven systems, strategies, guidance to making money in real estate by producing repeatable results. And that's how we've built our business model, trying to do the same simple thing over and over and over and get better and better at it. And with groups like yours, the 1031 exchange, we won't go into it too deep tonight, but this is the atlas of wealth building. Now, that's how Don and Dev and I met through a mutual friend. And I'll never forget, they had a client who had a townhouse in Cupertino, a great area, obviously, but they were losing about $1,600 a month on that. And we looked at the 1031 exchange for them, where they'd be able to sell that one townhouse and buy 2 duplexes in Florida and go from a negative $1,500 cash flow to almost $2,000 positive cash flow. So we were really, the lights went off, not only with Don and Deb, but other people we've worked with out there, where the 1031 exchange is a very powerful, powerful tool that Don and Deb will definitely want to talk to you more on, and so will our property counselor. If you had invested with us 5 years ago in our Jacksonville market, one of our main markets, $250,000, you would have made almost 70% on your money. And that shows the power of leveraging into real estate in markets that are growing. And you're going to say, well, does the market still have room to grow? Well, I'm going to show you some stats and we'll see what you think. And again, this is compared to the average S&P 500 or a solid real estate fund. You know, again, owning real estate, I believe, I invest in these other things as well, but has been my biggest ticket to wealth. And I want to stress again, this is what Don said right in the beginning. You know, long-term wealth is not, it's not just timing the market, it's time in the market. Time in the market is more important. And when you get the right property and you're willing to put time into the market, you don't have to be exact on timing the markets. That's when the real wealth can build. At least that's what happened for me when I bought my first investment property in Lompoc, California, 26 years ago. Now, 90% of millionaires all made their money in real estate in the US. That's Andrew Carnegie, and that's still accurate today. Timing the market, though. This is a great book. If you guys have ever heard of ITR Economics, this is who I follow because they're not popular, they're apolitical, they stay very grassroots to true stats, and they've predicted everything out of accuracy of 94.7% since the early 80s. I like those odds. And I read this book and it really helped put together our whole business model for new construction turnkey rentals. And these guys track all industries. As of last month, this is where they said we were for the different industries. Now, if you look at this, you can see there's recessionary times, there's slow growth, there's accelerated growth, there's recovery. And it does it for all different industries: medical, consumer, retail, foreign, new order, financial, wholesale trade. But look there at the bottom. Look at the bottom right there at the red going right into the blue. That's housing. And they've said that we're put in that position because of the interest rate spikes over the last 2 years, the issues with getting affordable housing on the ground. And you can see we're about to go into a recovery and accelerated growth period. They're expecting really good things over the next 4 to 5 years for key demographic areas like where we are in Florida. So this excites us a lot, and it's someone that I follow. What are some key indicators for success in real estate? First, don't wait for interest rates to drop. Everyone is saying right now, I'm going to wait for interest rates to drop and then it'll make sense to buy. You don't have to do that when you work with a good investment builder like us. Again, there's not a lot of us out there, but a good investment builder can build your investment property today and get you interest rates that are not even close to being published. So if you look at this right now, most of our clients who are buying with us right now are locking in at 3.75%. That's because we're also in the money buying business. We now, since we have a very healthy balance sheet, no bank debt, are able to go into large mortgage companies and buy out large tranches of mortgage money and pass that savings on to our investors, cutting down the market sometimes by 3-4%. And again, this is long-term money. It's either 10-year fixed with a 30-year AM or 30-year fixed 30-year AM. And this makes the difference between positive cash flow now on a solid new construction property in growth areas or negative cash flow. So you don't have to wait on rates to drop because we're able to bring in our own financing for people. And that is a key element for taking action. And also, it's the main reason why small investors are beating the big institutional buyers. We work with some of the largest hedge funds and institutional buyers. We build for them some bigger projects. They are absolutely salivating at the rates we're able to get for our individual investors like you that they can't get because they're in the commercial world and that's just not offered to them. But small investors today with these types of mortgage deals are able to beat the institutional buyers. Absolutely. Now you see it, now you don't. We got an inventory shortage coming, guys. I've talked to Don and Deb about this. This is not an opinion. This is a statistical fact that we've been tracking for quite a while. Look, the Sunshine State has only 25 affordable and available rental homes now for 100 low-income renters. That is significant. And overall, supply and demand, really started to hit a problem. This is one of the Fed charts for permits. This is something that I always watch. And if you look, permits really spiked in February of 2023. And then after that, because of the interest rate hikes, just builders went on the sidelines. They stopped pulling permits, and it takes about 2 years to shake out. So we saw a lot of inventory come on the market at the beginning of 2024, what we called COVID inventory, because everyone was delayed on their supplies. It all came out and it slowed down rental demand and how quick it filled up. But now what we've seen over the last year is that filling. And what it appears to be is we are about 2 years behind on needed inventory at this time in many of the key markets I showed you in Florida. And what that means is by about Q3 or Q4 of this year, we are going to go into an inventory shortage. Almost every time there's an inventory shortage, like we saw in 2020, two things happen: values increase and rents increase. And you want to be on the holding end if you're going to be, getting into real estate. This is something we tell people to seriously look at, and why we're very gung-ho and building very heavily right now. 4.5 million homes short in the US. And that's in high growth areas. One thing, another Fed chart. Again, we can get you copies of these slides, everyone. This is from the Federal Reserve. I like to go where there's very heavy population growth. So we're in the Southeast. I love Florida. I've been here now for over 20 years. But if you look at this, this is comparing the Florida population growth trend compared to Alabama. People always say, "Oh, are you going to build in Alabama?" We've declined and said no. This is the reason why at this time, because we like to have more population influx. You see that blue line just going kind of calm. We need something more of a hockey stick. And that's what Florida has and continues to have, with over 1,200 people moving here a day. Market summary. Some people have said to us, and again, Don and Dev are very good with their numbers and checking inventories. There's a lot of media out there saying that, gosh, there's so much more inventory in certain markets, like Florida markets, than there was a few years ago. And that's true, because we had the lowest inventory levels in 2020, 2021 that we've ever had. It just didn't make sense with all the happenings of the pandemic. But 2019, before all the craziness started, was by every measurable stat a very normalized market here in Florida, where we focus. And I just wanted to show you this. The market summary for the number of listings is about the same in December of 2024 as it was in December of 2019. So we've seen a normalizing market of the number of listings, and we're seeing in about 9 months that inventory shortage coming. So we're pretty excited for that. Now, affordability is going to win in 2025. The affordable houses that are priced close to the median, that's what's in demand. That's what people are looking for. And a lot of the bigger builders don't want to build them. So you want to avoid properties that are super high end, that you're going to hold a negative cash flow in case there is a stagnation, because you want to be putting money in your pocket every month while you wait for that growth. You also want to avoid the absolute bottom of the barrel. What I learned leaving California many years ago and coming to Jacksonville, Florida, I bought into properties that were in a lot worse condition than I knew, that were in a lot tougher neighborhoods than I realized, and had a lot more turnover than I ever expected. And those could have bankrupted me had I not been lucky to keep moving through. So I always tell people, own less of better quality, stick near the median. Those are the affordable houses that win and are going to do very well in 2025. Again, those are all going to have economic growth, population growth, a good affordability to them, where the average family income for that area can afford that house. They also desire that house in that area. And again, we're going areas where there is an absolute undersupply of the homes. Now, I wanted to show you guys this because, again, we are in 12 different markets. Jacksonville is about a median value market for us. 300,000 is the median values here. We have some that are cheaper, some that are more expensive, but this is about in the middle. So we've had a lot of people coming to us from Salt Lake City, Utah. You see the median home value is almost 600,000, which is about double of Jacksonville, but the median household income is nowhere close to double. We're only talking about a $5,000 difference, and rent's very similar. So this is what we call an affordability index, when you divide the average household income to the median home value. When you get below 15%, you got problems. That's just not a good place to expect both cash flow and growth to occur. Again, you can see that's why I like Jacksonville still at over a 23% affordability index. Closer to home for you guys, had a lot of people out of Orange County the last few years coming and buying with us. And it's not a surprise. Again, I was in Santa Barbara and Bakersfield for years doing investments. But Orange County, beautiful area, median home value just under 1.2 million, opposed to Jacksonville's 300. Household income, yep, definitely 30% higher. But again, the property is 4x more. And yep, a higher rent. But look at that affordability index, guys, under 10%. Beautiful area. Yes, you can play for the equity play, and I love appreciation. I do my best to get in its way, but I don't like to take those big losses around along the way. I want to go to an area that's poised for growth where I can get a good affordability index, have cash flow and the growth together. So one of our favorite markets that Don and Dev have been looking at is our Ocala market. This is Central Florida. It's the lowest hurricane risk zone in the state. No flood zones, very solid high growth area. Also our most affordable market. And you can see we're still getting in people for duplexes under 400,000. So you're basically buying two houses, brand new construction, for under $200,000 each. These have been one of our most popular models. Again, like I told you, that story about the Cupertino townhouse, to see one townhouse turn into two duplexes was quite interesting of an exercise to go through. And these are one of our favorite properties right now for the 2025 year. Why? Because the area is very affordable still. There's lots of growth occurring and the rental demand is very high. It's one of our fastest areas to get a property rented. And we'll talk about how do you learn more about this, not only through Don and Dev, but the property counselor that's been working with Don and Dev for the last year about, and that's who you can work with. But again, we are always looking for cash flow and growth, and that's what our properties achieve for our people. Also, single family homes. The single family homes under 300,000 are very affordable, highly in demand. The big national home builders are not building them, but you can step into cash flow right away on them and then look for the growth from there. All of our properties right now, so we're doing 2 years of free property management to help get it off on the right foot. Now, our most successful investors usually buy a property portfolio of about 3 to 8 properties. This is enough of a position into the market where it can become a residual income, its own little business without a bunch of employees or time spent. In fact, our people that buy 3 to 8 properties, and yep, we have some that go up to 25 properties. But what we have set the goal of, and they said it takes them less than an hour to a month to oversee that portfolio, to manage their property manager within our company and stay up to date on market news and such. That's our goal, is 1 to 2 hours a month. So wherever you are, you're across the nation, we're able to take care of things for you here. And we've been able to hit this from several people. It's very proud to know, with over 1,000 investors, we've created a few hundred millionaires from portfolios just like this. And some of the things that our people do, it's not only about the real estate, guys. I have 5 children. That was a big driver for my wife and I to really be active real estate investors, and you want to have the same. But we can do the work for you so you can get to the stuff like spending more time with loved ones, working on your health, pursuing the passions you might have given up years ago, getting that travel there, maybe stepping away from your job, your practice, your business more. We've had a few that bought a plane. One of our property counselors actually did that, who's also an investor, and retiring their parents. I know a number of people that did this for a second generational effect. So again, these are some of the reasons we do what we do, and we're super excited with the track record we've been able to have. And one of the things that's, again, sets us apart is, I believe, not only our team, but our commitment to only working in new construction. It would be much easier for us to find old houses, fix them up, but we've done the reports on thousands of old properties and thousands of new properties. And the new construction works better. There's less maintenance, less headaches. Turnover goes down. Our average tenant now with our new construction stays 3 years, opposed to about 13 months on older properties. And we've been able to build a beautiful community of people that not only come and see us at events, but also come into the trenches and see our properties live. Again, I have always said 1 day in the field is worth 30 days in the classroom. So if you have interest and say, man, this sounds really good, but something doesn't feel right, I want to come visit, please do. We love visitors. You're going to get to tour the office, meet our team, see the projects, see the markets. That way you get a real grasp of what we're doing here. And for selfish reasons, I'm going to let you know we have a 95% buy rate when people actually do come for a visit because they like what they see. First Friday tour. We have one. The next one's Friday, February 7th. A little short notice, but the first Friday of every quarter, guys, we offer this First Friday tour. You come in, you'll get to tour our office. I teach a 1.5 hour master class of just real estate principles and what we look for. You're going to then go out into a few of our markets, look at our different models, and again, see things live and in the trenches. It's one of the best ways I feel to learn. So if you're interested in that, you know you'll be able to talk to your property counselor. In fact, right now, Jaden's going to put in to the chat box about our property counselor, Allison. Allison has been with us for many of years, has created dozens and dozens of successful portfolios, and is already working with Don and Dev. So you can reach out to her, set a no obligation discovery call to get more of an idea of what are your goals, what's your positioning, what would it look like to build a portfolio with us, which markets are you preferring? Are you looking for more cash flow or more growth? Are you totally terrified of hurricanes? Are you wanting to go to certain areas? That's their job, and they've gotten very good at it from experience. So that is an overview of our business, who we are, why we do it. We're investors. It was built by investors for investors, new construction, take the headaches out. I want to make sure we open it up to questions.
Great, Jim. As our attendees might be entering their questions into the chat, I got a couple of texts here from our attendees here. First one is, how difficult is it getting insurance in Florida due to the hurricanes and other factors? You know, I've been hearing things in the news that it might be difficult, is the first question.
Yeah, you know what? I always have this one ready because it is so in the news for everything, Dev, that it's always here. So let me just go back to this. So let's take a look at this. Okay, so this right here, it's usually a video, it's not playing right now, of Punta Gorda, Florida, the day after the hurricane. And as you can see, if you look around here, a category 4 went right over here. On the right, there's one roof that did have shingles ripped off, but the rest of the houses are standing. There's some standing water, there's no flooding in any of the houses, there's some fencing down, but these houses look really together. And the eye of the storm went right over Punta Gorda. This was Hurricane Ian. Why are the houses okay the next morning? Well, this area was decimated in 2004. Like dad's cousin was living down there. It was really sad. And they changed all the rules. The way that you build a house, 2004 or newer, it's a total different structural design. You used to be able to build at 2 feet or 3 feet above sea level. Now you have to build at 13, 14 feet above sea level. So when you do that, you're building on higher ground, you have stronger structural design and materials. And you got to remember, a lot of our properties, even though we're in coastal areas, were built at least a few miles inland. So it's usually that first half a mile near the beach. Again, I live about, you know, 30 feet off the beach, so I take a big risk on the little barrier island, but my investment properties are further in. And so right there, when you're building on higher ground, stronger structural design, and your properties are a little inland, insurance companies really appreciate that. They're all about risk analysis. And so, like I said, my house here, personally, I was built in 2004. You can go down the road. It's only 9 houses wide to the intercoastal, but there's a few little cottages built in the 50s. Those are a third of the size of my house, if that big, and their insurance is 5 times the amount of mine. Why? Because it's built on lower ground. It's different structural design. So this is one of the most misconceived things that we've seen, and it is relatively easy for our new construction properties to get insurance. And the pricing, like the duplexes we have in Palm Coast, which is a coastal market, we're getting some of those done for $1,600 a year. So insurance, when people say you can't get insurance in Florida, I always kind of giggle and say, well, which property are you talking about? For our new construction, it hasn't been a problem at all.
Okay, great. Thank you for that. The next question we have here is, do investors have to use your property management company? Can they use their own? A little bit about how you find these tenants that will be good tenants for the property.
Yeah, great question. You do not have to use our property management. 95% of people do. That is totally up to you. If you say, "I'd love to self-manage," you can self-manage. Um, I do not like to manage my own properties. I never have. I did it for a while, and it just wasn't for me. I like to focus on different parts of the business. That's actually how I met my now partner, and became a partner at Southern Impression Homes, as they were managing my portfolio, and did a better job than I had been doing on my own. And so I enjoy using a property manager because I like to manage them and not be directly dealing with the tenants. And with that said, tenant screening is one of the most important things you can do up front. There's two things I think that can help screen a good tenant. First, good house in a good area. That is just something that cannot be overlooked. There's certain areas that are more desirable, that are going to get a better qualified tenant, people that are easier to work with, and the new construction does that in these markets that we've picked. And so getting the right property, right condition, right area, that's one of the best ways to screen for best tenants. Now from there, you have to have a rigorous um, protocol to screen tenants nowadays. I cannot believe. Again, we have about 42 people in our property management division now, and the things that they have to combat, from fake paychecks to fake employment verification calls, and so you have to almost be a little bit of a Sherlock Holmes to get through some of this. But when you sit down with our property counselor, they'll actually go through a slide deck to show you exactly what we do. And there's about 15 steps of what we go through to qualify a tenant. And we say no to a lot of people because we want to make sure that we get the best tenant in there. Again, we're very proud of that new construction stat that now our tenants are staying an average of 3 years. That makes a huge difference to your success when we get a tenant to stay that long for your first round of tenancy. So you don't have any turns, you don't have any downtime. So we're very picky on that. The counselor will be able to go through that more.
Cool. Awesome. Thank you for sharing that. A couple more here. First one is, where do you see the largest opportunity for future appreciation? Would that be single family homes, duplexes, or quads?
All four of them, all three of them have different appreciations. And remember, a single family is going to be a lot cheaper than a quad. So the percentages are what I'm talking about here. Historically, the property that has appreciated the most in percentages is the single family home, but you're going to sacrifice cash flow. Now, the quad will not have as high a percentage of appreciation, but it'll have a higher growth in cash flow. So that's why when people build a portfolio, they usually do a mixture. Again, all of our markets have those 5 factors that I look for, Dev. But right now, for growth, my favorite market right now, with 2025 being such about affordability, us coming out of this last 2 years of more of a recessionary effect with the interest rates, I really like Central Florida and Ocala. That's where we're seeing the most. We have an active population of both single family and duplexes there. And I think that's a solid way to start building a portfolio. Again, we have lots of markets. I believe in all our markets. But I always say this is my favorite market. Here's why. And that could change in 6 months. But right now, the fundamentals I'm seeing, that's my favorite market.
Okay, great. And question here, do you have any single family quads or duplexes available that are already rented? And if so, where are they located?
Great question. Yeah, one thing to note too, guys, we're doing new construction, but we're on a continual build cycle, which means we build on our own dime. We don't make you go out and get a construction loan and nothing like that. You step into a finished property if you want in less than 30 days. So that is super important for you to know, and you can close on those very quickly. What was the rest of the question, Dev, on that?
Um, if they're already rented and where they located?
Yes. Yes. Again, and we're building and putting them on the ground so quick. We have rented properties that are quads, single family, and duplexes. So again, if you get on with Allison, you can look at the different markets. She'll give you the fundamental strengths of each market, what she looks for, and then you can say, could I see some of your hot inventory? We always have a list of about 20 properties that I look at every week. And again, we're always building, but I give my honest assessment to say, these are my favorite properties because they have the highest returns. They're already rented. I like this area. We like this location for this property. So Allison can go through that hot 20 list with you.
Awesome. Hey, Jim, great information. Um, I have a question now. I'm not sure if I can share this. We've had a conversation, private conversation, you and I. But could you tell us as far as expansion? Are you looking to expand in Texas, Tennessee, and North Carolina markets? What's
We
happening?
are. We are doing that. We actually are there already. We like to test phase, Don, with the bigger guys. So we're building some turnkey rentals, some build to rent properties for them in all those markets. And then so we're already active there. We're just not doing anything yet with our individual investors in those markets. But we have expanded there. We do have presence there. We are building investment properties there. We're testing the markets with the bigger guys to make sure they work, and then we're going to be doing more formal offering to those areas. I wouldn't look for that this year. It's probably going to be the following.
Awesome. I can appreciate the testing. Um, and I mean, what you're talking about here, I think works very well for the first time investor and the experienced investor. However, how about the first time home buyer? I mean, here in the Bay Area, we know how expensive it is. And being that we are in a high interest rate climate, um, what would be some of the benefits for a first time buyer looking for his primary residence, but reversing it and maybe looking at or considering, well, maybe I should look at an investment. What's your thoughts there?
When I bought that first property in Lompoc, California, 26 years ago, I lived in a rental and I bought a three-family home and I rented all the units. So that's how I got my start. I was in Santa Barbara, California. To buy a property for me there was way too expensive, but I could drive an hour north and find a three-family home that was affordable. That property, I know you've seen some of my other presentations, that property quadrupled. Actually, I was able to use money off of that to build my real estate company, that first property. So for me, Dev, I can only speak from experience. I sacrificed buying my own home because I was in such an expensive market like Santa Barbara, and I used that money I'd saved to go to another market that was much cheaper to get investment properties going. I don't know if that makes sense.
Yeah, no, absolutely. It's kind of to my point exactly is that for the first time home buyer who perhaps has the capital to put a down payment on, but because the interest rates are much higher, might have some trouble qualifying for the price point or the home that they truly want as their primary residence. And
Yeah.
so using your product to help bridge that gap, right, with the positive cash flow as such, now they have a little more uh, incoming cash flow to help with their debt ratio to bring it down, and
And
maybe
yeah,
they can get into their primary dream home or start of their primary dream home. So, no, you answered it great. Thank you.
excellent. No, great question. Yeah, I owned investment property before I owned my own home.
Hmm. No, absolutely, absolutely. So, any additional questions that we have not answered, or does anyone have any questions out there? Okay, cool. No problem. Well, Jim, this was great information. Thank you so much. Um, as we wrap up today's webinar, I really want to thank everybody for taking the time to join us. So I guess the question is, what is the next step? If,
Yeah,
oh, go ahead.
next step, Don, what I would suggest is when you have the chance to have a consult call with someone like Allison, who's built, she's an investor herself, has built dozens and dozens of portfolios. If it's of any interest, then just do a call. Because the one thing I know about that, we're not a match for everyone, but at least you know where you stand. You might get a better bearing on your financial abilities that might pleasantly surprise you. I know that's happened a lot for people Allison has helped. So that's a great starting point. I would do that. I'd also take us up on a free copy of the book. Again, it's a USA Today bestseller. We hit that. Now we just give the book. We're not really in the book business. I wrote that more of a labor of love, and a lot of our clients are in that book. But that's a great part to really understand the principles and the strategy laid out of how this can actually work for you. So those are two great starting points.
Awesome. Awesome. Yeah, get the book. In fact, it's on my desk. I don't know if you can see. I do read it and refer to it. It's more of a guide for me. And so, great information. So yes, we will be in touch with those as well to follow up. If there was something of this webinar or presentation that you missed or didn't catch, or maybe you just didn't want to come online to answer your question, ask your question, no problem. Allison is here. She's available to you. And we will also follow up with you in the next day or so, and we'll share a copy of this presentation, and you can share with your friends and family as well. So for that, thank you so much.
Thanks for having us tonight, guys. Take care.
Yep. Again, thank you so much for being here tonight. We really appreciate your time, and we'll speak to you soon. Until then, happy investing. Good night.
Good night.